This is my final warning to investors. Unfortunately, the dark days are coming. And so today we're going to talk about that in terms of economics and what does that really mean for the United States and really the rest of the world. But before we do that, we have to ask ourselves, what is money? Money is a financial asset that creates buying power. So if you're printing money, are you printing buying power? Unfortunately, that is not the case. You can print money and also simultaneously increase the financial debt of this country. So let's talk about that. The main thing we have to think about is that when we look at the United States, there is so much debt out there. We spend more than we make as a nation, and now we're at the point where those claims are going to be due, and that debt's going to be called upon. So when we think about it, there's unfortunately just not enough financial assets to pay for all the debt that we owe, which will lead to an economic collapse. It's also a big mistake to believe that even though we're in such a low interest rate economy, that is somehow going to solve the debt problem, when in reality, it may end up making things worse. You see, the thing is with debt is that when we create debt as a country, we then package it up as bonds, and we have to have somebody to sell it to. We have to have a buyer. And that buyer is only gonna wanna buy the bonds or buy the debt if they know that they can increase their buying power by doing so. So if you want to go out there as a country and get financing, you need to somehow increase the buying power of somebody that's going to lend you the money. So right now, you have a lot of claimed assets out there. You have too much debt, too many bonds, and essentially the world owns too much of that. So now as a nation, when we try to raise more money, start to finance other issues throughout our country, we're not going to be able to raise the money. That's a big concern. For one, the yields are too low, and in addition to that, we're now starting to enter this hyperinflationary phase. So what does this mean? It means that the Federal Reserve now is going to have to try and create the funding gap, because the United States is not going to be able to finance the debt through traditional bond mechanisms. And so what does all of this mean? It means that we're putting the dollar at risk. The dollar is going to be heavily at risk. And the last thing you want is the United States dollar not being the world's reserve currency. You do not want to lose your reserve currency status. If you do, you lose the ability to raise capital. And you also lose the momentum of money into investments. That right there, that's not sound finance. The other thing we have to ask ourselves is, with all this money that's being produced and printed, we sent the checks out, is that leading to an increase in the production of goods and services? So typically, when you have an increase in the money supply, you also have to have an increase in output, an increase in productivity. And so that's not happening, which is very concerning. And as a result of this, you now have stock prices starting to get overinflated without the increase in productivity. When it comes to debt is money, and we're producing a lot of it. And when you look at the people that currently hold the debt, they're heavily overweighted in bonds. And in addition to that, they're also overweighted in US dollar assets. So think about this. If your portfolio is currently heavily weighted in US dollar assets, and you believe that the US dollar is in a hyperinflationary state, you're going to want to de-risk that position. And now the biggest problem is we're actually trying to print more money to cover the cost of the debt. And in addition to trying to cover the cost of the debt, we're trying to sell the debt as bonds when it's not really worth anything. And as I mentioned, we do not want to lose our reserve currency status. If we do so, we lose the benefit of financial growth as a nation. So what's the result of this? The result is that all of this is going to drive money into other assets, stocks, cryptos, art, gold, all other places, rather than being in the US dollar, which further weakens the dollar. The reason being that they want to escape from bonds. Now, with all of that in mind, we also have to think that China is now opening up its financial markets. When you look through time, England used to be a powerhouse financially. Now the US is the powerhouse, and now China is starting to become the new financial markets and a nice place for people to throw their money to diversify their risk, especially their sovereign risk with the United States. You also have to keep in mind that China is the biggest country when it comes to imports and exports all over the world. And here's the kicker. China only does 2% of those transactions in its native currency. So what does the world look like when that switches over? Money will flow to China. And so to sum this up, we have three big things going on. We have a financial factor, essentially a debt crisis. And then in addition to that, we also have a major wealth gap and difference in opinion when it comes to political views. There's a lot of conflict in the world. The world is a very chaotic place right now. We've got the virus going on, all of those sort of political issues, and the big one is the third one, which is the rise of a great power being China. So the real question then becomes, can we get out of this? Can we save America? So as equity prices go up, the excess returns from cash actually start to go down, which creates a bubbling effect in the markets. And as interest rates start to rise, the margin narrows even further. This is a very dangerous place to be. And as the rate starts to rise, the danger levels will then start to rise as well. And when it all comes down to it, in the United States, we'll never be able to turn that debt, that financial asset, into buying power. And as a return, as the monetary policy gets tighter, the stock market will become less and less attractive. So that's what I wanted to share with you. I really wanted to give you guys an overall economic outlook on the United States, where we are, where we're going, and why I think the doom and gloom days are coming soon. I just don't know exactly when it's gonna start, but I do think we're on our way if we continue on this financial path and cannot find a different way to leverage these instruments. If you guys enjoyed the video, be sure to give this video a thumbs up, hit the subscribe button, comment down below what are your thoughts on the current state of the economy. I want to hear from you. I'll catch you guys in my next video.